Well, neither of those big central bank decisions gave investors much to be cheerful about. Richard Perry from Hantec Markets joins us now to analyse their lack of action. Richard, the Bank of Japan, why did the speculation about a policy shift turn out to be so wrong?
Well, it's a good question. It's something that I've been asking myself all day, really. The market was pretty much set up fairly squarely for some sort of easing action by the BOJ, and we didn't get it. And you look at the economic data, and you do wonder why, really. You've got the inflation data that came in just prior to the announcement. That fell to -0.3% on the core CPI, and that's the lowest since, I think it was April 2014. So that's an incredibly worrying sign, and you've got other indicators such as industrial production, household spending, all falling away, not really showing much sign of economic pick up at all. So you've got to be asking the question why the BOJ has sort of held off, and you sort of get Kuroda saying that he wants to wait for to see how the activity of the negative rates are sort of filtering through into the market. He reckons it's going to take about 6 months, or maybe less than 6 months. So that's looking out for sort of the next questions over sort of easing measures coming into the second half of the year. So it seems to be that the BOJ is on this never-ending path towards further easing, and I think they're going to have to do something into the second half of the year. And the question would be, what can they actually do? You've got the possibility of further quantitative easing. I mean, they already own large swathes of the Japanese market anyway in JGBs and equities and things like that. So you've still not got a great deal of ammunition there to possibly get too much efficacy out of. You've also got the potential for further negative rates. But again, are they actually working? So you've got these big question marks over what the Bank of Japan can actually do going forward, and I think that's why certainly the dollar-yen rate has fallen so sharply today, because they're not really convinced that the BOJ can do a great deal.
Richard, let's shift focus across the Pacific to the Fed. What significant things did you see in what the Fed said about its economic outlook?
Well, I think it was pretty much in line with what myself and probably the market was looking for, really, because if you look across the sort of the global financial and economic conditions, they have eased in recent months. You've got China, which has produced better than expected growth figures in industrial production and retail sales, albeit fueled by debt. But also you've had the Chinese yuan, which is stabilised in its depreciation. You look at the emerging market currencies; they've strengthened against the dollar. You look at the oil price; that's sort of 75% higher now. And also equity markets in the States are sort of sniffing out to their old highs again. So you have had a calming down of these global economic conditions, and certainly that would suggest that that would give reason why the Fed has pretty much had to take those lines out about the risks from the global economy. But certainly they'll be focusing on their own domestic economy now, and obviously sluggish growth, sluggish inflation, that is an issue for the US going forward.
Richard Perry at Hantec Markets, thank you very much.